Welcome, my name is Vincent Luz with Forex Trading Institute. Please take a couple minutes and go over the following risk disclosure. Strategy number 5, whack-a-mole. Each day there are times in the FX market when a pair's movement is restricted to a small range of activity. Mostly this occurs in between market sessions. For example, late afternoon New York sessions prior to the open of the Australian session. Although whack-a-mole is considered a ranging strategy, it fundamentally operates as a scalping strategy looking for optimal entry points when a price tests the boundaries of the range. Now, this strategy can be applied to all major pairs. The pound dollar and the euro dollar are preferred. The chart time frame, we're going to use a 3-minute chart. You can use a 5-minute chart if your charting package does not have 3-minute charts. The indicators, we're going to use Bollinger Bands with periods of 7 and 2 deviations. We're going to use RSI. You can use periods of 14, 9, or 7. The levels of overbought and oversold are going to be 70 and 30. We're going to use a 20 exponential moving average. Our profit target, T1, is going to be 3 to 5 pips. T2 is going to be the 20 exponential moving average. And your stop loss depends on the entry point. Now, the single frequency is going to be high due to the 3-minute time frame. They're going to give you several signals during the day, and you want to use this during low volatility periods, for example, noon to about 10 p.m. Eastern time. And you want to identify the correct market to trade. The most important step to setting up and executing this strategy successfully is to select the correct market conditions. And this can be this strategy. You ideally want to use it in ranging markets. And you could use the FXTI market identifier in future strategies to help you identify if you're in a ranging market. Now, strategy setup on a 3-minute chart, you're going to plot the Bollinger Bands and the RSI indicator and the 20 exponential moving average. Now, rules for entering a long trade or a buy. Long trades are entered when the following conditions are met. In a low volatility market, look for a candle to close outside of the lower Bollinger Band. Enter a long position at the close of the candle with an initial target of 3 to 5 pips. That's including your spread. And a secondary target of the 20 EMA can also be used. For higher probability trades, wait for the RSI to read below 20 at the time of the trade. Set your stop loss equal to 8 pips plus your broker spread for the pair you are trading. Now, rules for entering a short trade or a sell. Short trades are entered when the following conditions are met. In a low volatility market, look for a candle to close outside of the Bollinger Band. Enter a short position when the candle when you hit the candle, when the close of that candle, you enter a short position with an initial target of 3 to 5 pips, and a secondary target of the 20 EMA can also be used. For higher probability trades, wait for the RSI to read above 70 at the time of the trade, and set a stop loss equal to 8 pips plus your broker spread for the pair you are trading. Now, let's look at this in the live market. I'm going to show you how to apply this strategy. Okay, so let's open up a chart, okay, and we go, for example, the pound dollar, and we can use this on a 3-minute chart. And let's go back here to the 3-minute pound dollar chart here. Now, when we go here to 3-minute pound chart, okay, we're going to open up the Bollinger Bands. Okay, so we go to indicators, and we're going to go to Bollinger Bands. Okay, 722. And then we're going to add the RSI, Relative Strength Index, which you're going to see it most of the times as Relative Strength Index. And you could put it either 14, 9, or 7. 7 is going to give you more signals. Okay, they might give you a couple false signals, but they'll give you more signals during the day. If you're more conservative, you might want to use 14. Okay, so I'm just going to apply 7 here. And then I'm going to put the 20 exponential moving average. So I'm going to go to moving average. Moving average exponential. And then we're going to put here on the 20 Okay, and I'm going to show you how to apply this strategy. You can see how effective. I like this strategy a lot, especially because you could scalp during the day and obtain various pips during the day. So let's look at a short example first, and then we'll look at a buy example. Okay, first thing you want to do is see that it's reading above the oversold area. Okay, so in this case we're above that oversold area. You could have it either at 75 or at 70. Okay, depending, if you put it at 75 you're going to get less signals, but they're stronger signals. So right here, this is a sell signal. Now you want to sell at the close, because look how this is the top band and this is the bottom band, and the line running across here is the 20 exponential moving average. Now when you get here and you want to meet the two factors, one, that the market sticks out of the outer band and it's oversold. For example, here it's stuck out of the outer band, but the market was not oversold. So you might want to just draw a line here and see how it's stuck out of the band and the RSI is over bought here. Okay, and you can see your first target is 3 to 5 pips, or you can use the exponential moving average. In this case, I like using a lot the exponential moving average. That would have given us, we entered here and we got out here. That's 8 pips. Okay, the market continued falling, but we went for 8 pips, and that occurred in, it's not too bad, 8 pips in 6 minutes. Remember, each candle is 3 minutes. You did 8 pips and you did one standard lot. That's $80 profit in 6 minutes. Okay, now let's look at another example here of buying. We could go back here, and this would have been a buy example. Okay, this would have been, sorry, a buy example. The market stuck out of the range. Okay, and we were over, in this case oversold, so we're looking to buy, and you can tell the market went sideways a little bit, and there it hit our profit target. Now you could have used this, the 8 pips, as the profit target. It went 25 pips right on that first shot, so you were well above. If you waited for the exponential moving average, then you made 20 pips. Okay, and this occurred 3, 6, 9, 12, 15, 20, 15, 18, 21, 24, 27, 30, 30. So about a half an hour, you made 25 pips again on that one standard lot. You're talking about $200, okay, in half an hour. You can see how you could just scalp all day on this. I mean, I like this strategy, especially in the afternoon. If you have nothing to do and you just want to make some extra money instead of watching TV or something, you could be making some money here scalping. Look how it hit. This was out of the range, so we would have bought. Okay, we had the 2, the RSI, and then the market easily gave us that 20 pip profit target. Okay, so that was 28 pips, so we made another $280. So we've been perfect so far in that day. Yeah, you might have one, and the nice thing about here, the risk is very small. It's 8 pips plus it's 8 pips from the bottom plus the broker spread, so you're only risking about 12, 14, 15 pips per trade. So this is a very, very nice strategy, especially when you're beginning and you have a small account and you want to build up your account. Look how you were over sold here, and it was sticking out. You were right above that line, okay, on that oversold area, overbought area, sorry, telling you that the market wanted to go down, and the next 3 minutes it hit your profit target. You made another 20 pips here, and you can see how you could just scalp all day getting pips in this market. Okay, so this is a very effective strategy. Okay, I prefer to use it in the pound dollar. It can be used in any currency pair, but preferably the pound dollar. And I just want to show you now, right now, as I'm recording this, it's giving us this opportunity. Look how it just stuck out. It was oversold. This is present market. Look how this gave me the sell, and I got in here, and in this case the lower band is lower than the thing, so you would just go down to the lower band, and look how it gave us 11 pips here in 3, 6, 9, 12 minutes, and it's 8:30 at night, so we're still in that low volatility period. So this is a very effective, highly effective strategy to apply scalping, getting in and out of the market. Okay, my name is Vicenteluz with Forex Trading Institute. Practice this strategy, demo trade it, and you're going to see how you can make some extra money during the afternoon when most people are not trading because there's low volatility. You could be getting in and out and grabbing some pips. This is, again, one of my favorites also, along with Denver Rocks and the Alligator Alley. I like this strategy as a scalping strategy. Okay, so I'll see you at the next strategy.